Welcome to a series of podcasts from U Prime that'll be in the public domain. So, what do we have today?
Today, we are going to talk about finance, especially engineers who want to join and get into finance. So, I'm a computer engineer. I'm also interested in finance, but then I always think that it's a completely different field. And is it a good choice for me to just jump into finance and start something new entirely?
Okay, let's generalize the question a little bit. Your question is more specific to computer science. I'll take a broader example of people who have technical knowledge. So technical knowledge, I would mean basically people who have some understanding of computer science algorithms, have a degree in advanced mathematics, or have a degree in statistics, or like engineers who have a bit of everything. So these are people whom I call like people with some technical exposure. So if you have technical exposure already with you, I think it's a very good idea to take your technical expertise with you to the investing world and go about it in a very systematic manner by understanding the underlying principles that exist in finance. So you'll be much better if you understand a subject like stochastic processes that people who in electronics and communications study. Right. If you look at Nobel Prizes have been given on this topic in economics. So Merton's extended Black-Scholes model was awarded the 1997 economics prize. His entire theory is dependent on partial differential equations, understanding the formalism, mathematical formalism that comes along with this topic. So you can think for yourself, if you're capable of understanding the very best practitioners in finance, why would you want to do a second grade degree and take up finance like the way a non-technical person approaches this field? There's an advanced way of doing finance and economics, and there is a intermediate way of doing economics and finance. The advanced way of doing economics and finance is basically you take the technical knowledge with you and then you use that to understand the technicalities of all these procedures as opposed to just blindly trading. So that'll be a good approach. So my advice to anybody who's technically proficient, improve on those technical skills and don't give up on those skills just yet, because all the skills, especially mathematics, statistics and computer science, will be utilized in the field of finance, and you will regret having shifted from a quant-based way of doing these kinds of analysis to a totally finance way of doing this analysis. There's nothing wrong in doing finance-based way of doing, as we call it, the fundamental analysis, the Ashwath Damodaran school of valuation, as we can put it. There's nothing wrong with that, but that would require a different skill. That'll be more akin to an accountant doing analysis on the balance sheet. So reading balance sheet and profit and loss account, or income statement as they call it in US, is a good skill, but it's a great skill to have on top of the technical skills that you already have. So you can understand seasonal changes, you can understand how macro factors affect a given company. Don't think of anything as a stock. Always think of it as a business which is part of an economy, and all these businesses interact and compete with each other and collaborate with each other. If you think of owning a business or a part of a business and all you want to do is understand that business processes better, you'll be a far better investor than somebody who just wants to trade. You'll be much better off than doing the trading with technical analysis. Right. So the point that I want to drive home repeatedly is the fact that if you already are proficient in technical skills, don't leave it. Take that with you to the business school if you can, or learn it on your own. You'll be in a much better position. With the data analysis and machine learning coming to the fore, literally everybody who does investing has a huge machine learning team. So which is the order of the day, which is the way it ought to be, as opposed to fundamental analysis. Fundamental analysis is great. All the best investors in the world are fundamental analysis people who understand businesses, as opposed to, the idea is like you understand the business and the people involved and understand how, as a result of them being in the picture, affect the larger outcome of the company, as opposed to, let's say, weather affecting the value of the stock for one day.
Right.
So you have to basically think of it in a very long-term view. A long-term view would mean
growth investment and things like that.
Things of that nature, wherein like material information changes on a day-to-day basis has no bearing on the investment decisions that you make. And interest rates go up and down, couple of 100 basis points. There will be currency wars between countries, but these things should not materially affect a business which has a long-term growth trajectory.
So what you're trying to say is believe in the business rather than the market.
Exactly. There is nothing called a market. Market is a bunch of people coming together to make transactions, as a result of which there is this abstraction or this notion of market. Market is just people, and if you understand people and how they operate in the form of a business, that's as good as understanding the business. You don't have to understand the market in itself.
Right. That's true.
Yeah, that's about it. Thanks for listening to this podcast. I hope you come back for more podcasts. Thank you.